Well, if I have a position and I have cushion, let's say I have 15, 20% gain in it, I will sit through the earnings report, even realizing that I could lose it all. I will sit through it. Before I'd kind of trim back, but now I'm like, if we're seeing a lot of good earning jumps, I don't want to miss that. However, if I have no cushion, I can't do it. I have to wait and just see if I can, let's say it's a good earnings report and we'll get a gap up and a lot of volume. Then I try to finagle my way into that stock somehow if I think it's really important. So that's what, we're waiting for next week, see what kind of earnings reactions we get to a lot of these stocks. But once you get cushion, you sit through those and you can get really rewarded. One of the stocks through 24 and 25, big winners, actually the top winner in my portfolio was Palantir. And a lot of that was because I had that low cost basis and I sat through it. And then I just, you get lucky. Earnings reports, everybody loves it. The hardest thing sitting through that one was that it is the most overvalued on a price to sale company in the history, I think, of the market. And so that was sitting in the back of my mind the whole time, you know. But and if you look at that early 24 when they had the biggest volume ever, even on a weekly chart, and it was the biggest volume ever on a daily chart when it jumped right there. Yeah. So playing that, and then actually I had to sell out of it a few days later when it turned down, but I never took my eye off the stock. And they had a few kind of like back and forth movement there. But then again, when it broke out past 30, that was like a pile in situation. And then, pretty much held it and through some of the drawdowns, traded in and out of it, you know, uh, in there, took some off, added back in once it reversed higher, and just kind of keep playing that game with that stock.
Hmm.
But that's sort of like that's a lot of patience to sit through that, because everyone's like, oh, look at this other new shiny stock that's jumping, or this shiny stock that's jumping. And I was actually shocked, Palantir, because I thought at $60 it was way overvalued.
Right. Uh,
And it kept going. I'm like, okay, I'm
yeah.
not going to argue with the market. I'll
Hmm.
I'll keep playing it. Now I'm actually completely out of the stock, but that was one of the longer kind of holds of a core position and trading in and around through the corrections. I
Hmm.
think we're right on April 7th low. When it hit low on that April 4th, that Friday, I was on IBD live and we talked about if it made a little undercut, we might have to unload some. And I did actually unload some on April 4th. Yeah, right there.
Hmm.
And then that next Monday, actually, it turned green. And again, we talk about relative strength. The S&P did not, we still weren't on a follow through day. We were still looking for a bottom, easier to say in hindsight. But I looked at a lot of stocks that turned green that day and had these strong reversals. And I was like, those are the stocks we have to be in, even though throughout the straight lines quite weren't at highs yet. But again, it's sort of like they were outperforming the market. They were relatively doing much better than the other stocks. You
Hmm.
know, uh,
No, yeah, it's a very good point because I mean we saw some, of course, in March and April of 2025, we saw some very dramatic drops. 50% for some of these high flying stocks wasn't unusual, and Palantir certainly got close to that 50% drop. So, do you ever have no matter how much cushion you have, do you ever have kind of a line in the sand? Our friend Kathy Donnelly, she talks about the mental capital preservation. Do you come up with a line in the sand to say, okay, as much as I might love this stock, I'm not going to let them take away more than X percent from me.
no, I really don't have that. It's a little bit stock by stock basis. It's a little bit too what's happening in general market. And the reason I say that, sometimes we look at back in the stock chart and we'll go like, why did I sell that? It was working perfectly well, and in the same situation, we're looking at another stock and I didn't sell some. What's going on? Well, what's going on is you look at like your notes, if you keep a daily diary, something else was really going on bad in the market. And it was just like, okay, I just want to take some money out of the market because I'm getting hit everywhere else. There's nothing wrong with that particular stock, or vice versa. The stock's not doing that great, but you have other trades that are financing that stock. So I don't really have a hard and fast rule. I'm familiar with Kathy Donnelly's, and that's really pretty great that she kind of figured it out. I still haven't.
Well, and again, you kind of have to figure out what works for you, right? That's kind of the rule that she comes up with, and again, she has her levels, but everyone kind of has to figure out their own level of how much can you take. I my stomach is not as strong as Kathy's. I couldn't take that kind of drawdown. I mean, she's sat with Nvidia through some 50% plus drawdowns, and um, you know has been okay with that. I could never do that. I just don't have the stomach for it. I want to talk a little bit. You mentioned kind of a daily diary. Are there things that you feel like you do, and again, I'm stressing the consistency that you really kind of bring to the table here. You've had some, again, phenomenal results year after year. Are there some of these things that you do on a consistent basis that you think really help get these superior results?
I really think the most important thing is, and I know it sounds counterintuitive, but it's cutting the losses.
Yeah.
If you get into a trade, it's not working. You cut it.